The next COLA increase will be announced in less than 3 months. And right now, as things stand, according to the most recent estimates, it would work out to an increase of right around $1,000 extra in your checks on an annual basis. But with that said, due to recent events, could this actually be much higher when all is said and done? In today's video, we are going to be breaking down everything that you need to know, but before we go ahead and dive into it for today, if you would like to receive $300 in pretty much completely passive income, in a pinned comment below, I will be leaving a link where you can sign up for Capital One 360 checking. You see right now, Capital One is running a promotion where if you sign up for one of their 360 checking accounts and you make two separate deposits of at least $500 within the first 75 days, from your account opening. In return, Capital One will be giving you a bonus of $300 just for doing so. Now, as far as those deposits go, they can either be like your Social Security checks. So if you receive at least $500 in Social Security benefits, that would count towards earning your $300 bonus. It could also be your pension, paycheck from your job, anything like that counts. And in return, once again, you would be receiving $300 from Capital One just for doing so. And in return, I may also be eligible for a commission as well, which of course I would greatly appreciate you supporting my channel. But as always, terms and conditions do apply. Okay, so once again, we have a COLA announcement, a cost of living adjustment increase announcement coming up from the Social Security Administration in less than 3 months. This will be announced on right around October 14th. And again, you'll start receiving these increased checks starting in January 2027. If you receive SSI benefits, you'll receive your first increased check on December 31st because January 1st falls on a holiday. So you'll be receiving your increased check one day early. And we already have some estimates out there. These are ranging anywhere between 3.5 to 3.8%. But due to recent events in Iran, is it possible this COLA could actually be, much higher than what is being projected right now? In today's video, we are going to be covering everything that you need to know. So let's go ahead and dive into it for today with this article here from the Motley Fool. They say a top expert just lowered her 2027 Social Security COLA forecast. Here's why that could be a mistake. So they say that will Social Security beneficiaries receive a smaller raise than expected in 2027? If one top expert is right, the answer is yes. Last month, independent Social Security and Medicare analyst Mary Johnson projected a Social Security cost of living adjustment of 4.7% for next year. However, Johnson recently slashed her forecast to 3.7%. Her downward revision has ample justification, but it could also be a mistake. So again, she was projecting 4.7% last month. This month, she slashed that all the way down a full percentage point, down to 3.7%. That is a pretty big adjustment in her COLA, and that is because of one reason. But again, this is why it could also be a mistake, why she might actually be wrong, and why you might be seeing her, estimate increase next month in August whenever the next inflation data is released. So I go on here to say that Johnson based her lower Social Security COLA outlook on the June inflation report released by the U.S. Bureau of Labor Statistics on July 14th. The consumer price index declined from 4.2% the previous month to 3.5% in June. The inflation metric on which the annual COLA is based, the consumer price index for urban wage earners and clerical workers, also rose 3.5% in June. The June CPI decline was the largest one-month decrease since April 2020, according to the BLS. Johnson noted in a statement, she said, quote, "This is a significant drop in inflation and one that we've rarely seen in the June CPI data over the past 5 years." And of course, once again, that is because the ceasefire was created between US, Iran, and Israel. And whenever that happened, of course, the price of oil also, sharply declined. But since then, of course, the ceasefire has now, as I said, it has ceased. And we are back in pretty much a full-fledged war with Iran. And because of that, we also had the price of oil shooting right back up. And the CPIW, which again is the metric that they use for these cost of living adjustments, they actually weigh transportation and oil costs, more heavily than they do in other inflation metrics. And because of that, anytime oil goes up or oil goes down, that's also going to have a sharp adjustment in the cost of living adjustment in the CPIW as well. Now they go on here to say that there is a simple reason behind the drop. The US and Iran entered a ceasefire which caused oil prices to fall. This resulted in the energy inflation index declining by 5.7% in June, following increases of 3.9% in May, 3.8% in April, and 10.9% in March. However, the ceasefire that caused the unusual inflation improvement is no longer in effect. Hostilities have resumed between the US and Iran, and oil prices have again risen. So, as we see here, the global oil benchmark Brent crude has surged more than $25 per barrel, which is an increase of roughly 25 to 30% since the ceasefire with Iran was declared over in early July 2026. And because of this, whenever the next inflation report is released next month in August, we can also expect those numbers, the inflation rate, to have increased for the month of July. And then perhaps in September, if the war is still going on, the inflation that took place, continue to go up in August, we're also going to see, an impact from that as well, which of course is going to correlate very heavy in what the next cost of living adjustment is going to be looking like. So they go on here to say that it's possible that Johnson's estimate of a 3.7% COLA next year could prove to be in the ballpark of the actual figure. So the Senior Citizens League, a nonprofit organization that advocates for seniors, projects a similar COLA of 3.8%. However, those forecasts could also be overly optimistic. There's a real chance that the conflict between US and Iran could continue for months. And importantly, the increase in oil prices hasn't been as significant as it could have been. Both the US and China have dipped into their strategic reserves for different reasons. The US has increased exports while China has used its stockpile internally. But such artificial support of oil prices can only be sustained temporarily. Morgan Stanley commodities analyst Martine Ratz believes that the US could feel the pressure to stop using its strategic reserves sooner than China will. And if the US and or China reach the point where they can no longer draw down their reserves, oil prices could likely soar, and so would inflation. We could very well see an actual 2027 Social Security COLA close to Johnson's previous projection of 4.7% in this scenario, which would reflect the highest increase in 4 years. So, very well could be correct, but we will have to wait and see. Now, they say that to be sure, any COLA forecasts are premature for now. We won't know the actual Social Security benefits increase until mid-October after the September inflation data is available. That's because the Social Security Administration uses only third quarter CPIW numbers in its annual COLA calculation. However, the COLA could be higher and perhaps much higher than Johnson's current projection of 3.7%. July and August are peak months for the summer driving season, when gasoline prices often exert significant upward pressure on inflation metrics. With a resumption in hostilities by the US and Iran, gasoline prices could remain elevated through the rest of the summer. Johnson, TSCL, and any other prognosticators could soon find themselves having to revise their Social Security COLA estimates upward. Meanwhile, the 75 million Americans whose January benefits depend on what happens next find themselves in the midst of a waiting game. So again, up on the screen, you will see the release of the inflation date. So coming up next month on August 12th, we will know the inflation for the month of July. Then on September 11th, we know the inflation for August. And then October 14th, we know the inflation data for the month of September. And then also on October 14th, we will know exactly what the cost of living adjustment is for the millions of Americans receiving Social Security benefits. Now, up on the screen, you can also see how much of an increase you can expect to receive, whether you're a retiree, receive SSI, or receive SSDI, based on different type of cost of living adjustments that could possibly take place. We're using 3.5%, which right now is a little bit lower than what's currently being projected. We're also looking at 4%, and we're also looking at 4.7%. So for the average retiree receiving right around $2,083 a month, if the COLA ends up being 3.5%, you'll be receiving an extra $72.91 in your check. So it's going to be right around an additional $840 or so on an annual basis. Now, if you get a 4% cost of living adjustment, in that case, you'll be receiving an extra $83.32 per month. And then finally, if you receive a 4.7% COLA, in that case, you will be receiving almost an extra $100 per month. And in that case, it'll be an extra, close to $1,200 on an annual basis. As far as SSDI beneficiaries go, if we end up getting a 3.5% COLA, in that case, there's going to be an additional $57. A 4% COLA would bring an extra $65, and a 4.7% COLA would bring an extra $76 per month. And then finally, if you receive the max benefit for SSI, which is $994 per month. In that case, if there's a 3.5% COLA, you can expect to receive almost an additional $35 a month. With a 4% COLA, you can expect to receive an additional almost $40 a month. And then finally, with a 4.7% COLA, you can expect to receive almost an extra $47 a month. That is, again, if you receive the max benefit for SSI. But with that said, that is all I have for today's video. Drop a comment below. Do you think we're going to be more close to, or closer to receiving a COLA of 3.5%, or could you possibly see a COLA of 4.7% next year in 2027? And with that said, would that actually be enough to keep up with inflation, in your opinion? Drop a comment below. But that's all I have for today's video. And as always, I will see you in the next one.